What is up, everyone? Hope everyone's having a wonderful night. Hope you enjoyed the intro. A little special song I've been jamming to today. So, hopefully everyone's having a good day. Looks like crypto's been kind of flat this weekend, so that's alright. Hey, thank you, Swank. We appreciate that. Bowling was shitty today. I had a hangnail on one of my bowling fingers, and it just mentally messed with me the entire night. I had a good last game. I bowled a 188 the last game, but my first games were like 140s. They were not great tonight. Let's throw a little background music. Hold on. Turn it down, though. The name of the song was Indian by O'Neill, if you like the song. It's 9:30, 9:24 right now for me, so I'm in Wisconsin, so. You gotta check out WWE. That's super loud. I mean, I literally got it at like 10%, so. Yeah, I hope you guys like the music. I know it's not for everyone, but I like it, and when I go live, I like to have fun, so it's not for you guys, it's more for me. It helps me enjoy going live more. So we kind of got this, Bitcoin looks good. I mean, you got this cup handle retraced to 382. You kind of got an inverse head and shoulders here. I'd like to see how it plays this. It's penning out right here, but that's not why we're here tonight. I just kind of wanted to cover it while we were looking up. So, what I've decided for the Webull challenge, now that we'll have some money, and I'm not going to do it this week because it's a short week, but starting next week, $100 full lottery challenge. Every single week we're going to have a $100 challenge. The goal is to get to $1,000 in a week using that $100 every single week. Every single week, lottery challenge, $100 to $1,000. That's the goal every week. We're going to do it. I mean, literally what happened is, so if you guys want to know the Viacom thing, it's not rocket science. It's pretty easy. So what happened was you had a F ton of institutions make a ton of money. They bought in down in the basically between the $10 and $30 range. So in here you can see this volume is super high. So they all bought in from here to here. And Viacom went absolutely bonkers, so they said, hey, I want to get rid of this. And so they contacted their brokers and said, I want to make large block sells, and the broker said, yes. And then that caused a panic sell, and it just was lights out from there. So it happened on a number of stocks that were overvalued and had extreme runs. And basically, it was a correction that happened in one day. You don't see it usually that way. Usually you see this stuff happen in the dark pool, but this is why they don't do it on normal stock exchanges, and they do it on dark pool because this is what happens when they do it on normal stock exchanges. So this was something that was on a listed stock exchange, which is not normal, and don't expect this to happen very often. If you caught wind of it and you're able to play it, whether it was someone told you about it or you caught our flow alerts, because our flow told you this was going to happen. Like, I told you Fitch was going to happen, and it happened to the beautiful ABC down. I mean, we caught this at 63, 62, 63 right here. We played this all the way down to 41, 45 in that range. It was awesome. Really awesome. What's up, Warren, about the China hedge fund thing? Jose, like, WWE is in the server. Like, I don't know why you want me to check it. Like, Burley posted it in the server. It's got a nice cup and handle and could potentially go to 70. We'll see. Let's see what happens. It's filling this gap right now and could break either way. Alright, let's get into it. I want to talk about leaps. So, I made this leap list here. I'm going to show you how I made this because I think that's important. So, I don't always share my personal scanners, but this one I don't mind. So I'm using bar chart. I like bar chart. We'll do this from scratch. So you could do this on FinViz or anything. I just like bar chart. I'm a premium member there, so I could do some fun stuff. So I want to talk about long-term investing today. We've been talking about fundamentals in the past. I want to talk about how you can make a screener for looking at it. So I made a screener. I downloaded it. I posted it in the server. You can go download it. All of it right here. Actually, here's the watch list. Let me download this. So I'm going to go export list, leap list. I'm going to put this in the server right now. You can go download this directly into TradingView. I'll do it right now. Hold on one second. Announcements. You should see me typing in announcements right now. Leap scanner, TradingView, watch list, import. So I'm going to give you this right now. Alright, there you go. Import that directly into your TradingView. You'll get everything that came on my scanner that I posted before. I just was using Chartmill fundamentals for that. I gotta dig into it more. So on Neo, I am planning on writing a full fundamental review of Neo this week, so look out for that. So, but anyways, let's get into what we're here for. I want to be focused tonight because I want to get these classes down to very refined 1-hour watches where we talk about exactly what we want to talk about and we learn stuff. So, for me, price first thing. So we got two things in the prices and volume. So last price, add that greater than 7. Next one, volume, add that greater than 1 million. I'm going to explain this after I get done with this. Okay, now this is where we get interesting. So I like doing bar chart opinion. Usually they have good opinions, so I will go long term, add buy, analyst ratings. I will do that. Current analyst rating, add. I will go mod buy, strong buy. Basically, you know, other people's input is important, so these will help. Really, what happens if you don't add these? You get this huge list, and why not refine that list down to the best ones possible? So, growth rates really big. 5-year revenue growth, add. You want that to be at least positive, so 10% or more. Earnings growth, add 10% or more. You also want financial. I think there's something. Nope, not in there. Trying to think if there's anything else I added. Let's see if this comes up with results. So 239 results there. Alright, so that wasn't quite it. What am I missing? I feel like I'm missing something. Oh, options. Hold on. Where's the options? Options over here. Okay, here we go. Has options. Add that. Yes. Well, I'm gonna change the music up here. 1 second. back to here. For some reason when I made this scanner it didn't change. EPS growth. That was what I wanted. This is what I wanted. Okay, EPS growth versus previous year. We want that greater than 25%. Got it down to 100. Let's see, 50. Got it down to 66. Alright, this is pretty close. So, market cap. Yes, thank you so much. That's pretty important. At least 300 million. If you want it to be a little bigger, you can. Gets down to about 63. Yeah, Riot is in here. I mean, the thing is if you look at their revenue growth, Riot's almost at the top. It's crazy. So either way, there's a lot of parameters you can use in making a long-term scanner. I mean, the big ones you want to know is the company getting better. So earnings growth, revenue growth, EPS growth, those are the big three. Market cap you could play around with, analyst ratings, volume, that sort of thing you could play around with. I mean, you can have it over 10 if you don't like playing with low-term stuff. You can have it over 20 if you wanted. I mean, ideally, if you want like a good starting point and you want high upgrades, over 20 would be fine. Oh, here we go. Overall averages, overall opinion greater than 90. There you go. That gets you a short list of like 24 stocks that you can look at. So, if you want this, I'll download this. I'll throw that in the Discord. I'm uploading it right now if you want to download it. It's in the announcements. There it is. Alright, so either way, I made basically a list that I wanted to go through. I wanted to talk about a couple of things. So let's just start with the ones that did the worst and the ones that did the best. So GTHX, average volume, EPS negative. So I don't really love that. And this does look interesting though. I think that's what, you know, you have the most volume in the most recent, and you do have positive volume, but you do have, I don't know much about this, but with them losing this much money, that'd probably be an instant no for me. Goldman Sachs with their most recent run, I would imagine would go through. Yeah, Hulk, I hope it works out for you. I got no money in it, so I really do. You know, I hope I'm wrong. I'm just trying to be a cautionary tale. So, I have a feeling this will go through a correction, so that's nothing for me. I do like ATH, so this is one I do want to talk about. ATH makes a F ton of money. Athene Holding, and they're not even at all-time high. It looks like they've been trying to crack it, and you know, this thing, as soon as this thing cracks all-time high, it's gonna go nuts. So, you can see down here fundamentals. Profit margin's been going down, but revenue's been going up every year, and so I'm interested in Athene. This might be one we keep on the short list. I do have an alert set on it, so we'll see what happens here. Box is another one I've been watching. So Box has slowly been getting better. They're almost profitable. Revenue every year has been increasing. Profit margin, this orange line, the profit margin is what is really interesting. So looks like they're developing some buyers and sellers in this gap area. So we're going to pay attention to that. And then basically I have some alerts set here. So this test, the 22 area, 22 is going to be a nice buy, elite buy area. And we can look at maybe, you know, the 20 to 25 range for leaps. And I think this thing can hit 30 almost fairly easily. Google. Alright, so this is one that might be a little interesting. Thing is, like, Google's revenue has just been exploding. Literally their revenue, I mean, they almost hit 200 billion in revenue last quarter. And their profit margin is not getting... Their profit margin is holding 22% about. But with revenue increasing and profit margin not going down, this is one of those forever stocks. Google does it right. They're a forever stock. The fact that they're like a 70% market cap of Apple, I would much rather invest in Google than Apple, even at $2,000 a share. I'm just going to throw that out there. Now, I do think it goes through a correction first, and I think we could get in around maybe 1900 or 1800. But you can start at, I mean, you see the volume going down. Something's going to happen soon. HZNP, looks like they make money. I don't know. See, a lot of these stocks I don't know much about. So I literally just scanned today, and we're just going through the technical analysis of them to see if it's a good time to get in. I think ATM was super happy on Friday about Baidu because he made a F ton of money on it. In fact, his small account is up more than mine because of the money he made on Baidu. That was a brilliant call on his part. He played it perfectly. I think he was mad because I told him not to get in and chase it, and then he eventually did, and it worked out great. So, cracking a monster. All right, so HCNP, one of those again that you might want to look into. So when I'm looking at leaps, if I'm looking at increasing revenue, like this revenue is going crazy. Yeah, profit margin's going down, but revenue is exploding on this. So really interesting on this. Every quarter revenue has been getting better, literally increasing exponentially. So it matches the growth, which is nice. As long as forward guidance is good. We'll have to see. The thing when you're looking at leaps, you sometimes have to look at forward guidance. Balance sheet is good. I'll put this one on the list. I like this one. I'd be very interested in this one. I'm going to take this one off. I don't love that one. I don't love that one. All these other ones look good so far. Morgan Stanley. And banks are just undervalued. They have been for forever. And volume's been decreasing ever since last March. I don't love the huge banks. I think they're getting to that point where they're going to be hard to invest in, but I do think there is small upside that in them if you wanted. Twitter, again, revenue has been increasing. You can see they're up to 4 billion. I mean, honestly, I think I don't love Twitter, to be honest, but I could see a world where if Twitter did a few things, they could be like Facebook. Like, they have a mammoth foothold in the social media world. A mammoth foothold. And if they use their cash enough, I'd be very interested. So what I'm looking for here is you got this huge cup right here with a breakout. You got the cup and handle right here. The breakout and the retest. So what I'd be interested in watching this retest around 57. It did fill this gap, but I want to see this hit here and bounce and then break this downtrend, and that's where I would buy Elite. Alright, CCK. Crown Holdings. This one looks very interesting. I've heard of Crown too, so this is a recognizable name for me. Holy cow. Okay, so it's been a little bit here, but their this is awesome. So their profit margin is skyrocketing. Revenue looks like it kind of flattened a little bit. Let's deep dive the financials a little more. Financials on this look awesome, by the way. So PE ratio still healthy. Cash flow looks great. Balance sheet. Hold on. Let's go back to statistics here. Okay. Balance sheet could be better. I'm going to be honest with you. Quick ratio, current ratio. Current ratio is good. Quick ratio could be better. Balance sheet could be way better. They have a lot of debt. Revenue is fantastic. I can't really fault them there. Free cash flow is good. Yeah, their balance sheet's getting a little bit worse. Their income statement's getting a little bit better. They did fail estimates here, so as long as guidance keeps up, this could be a good one. I don't love the rounded top here, but if it were to break, say, this mark right here, then I would be interested. So let's look at the daily. We should be looking at the daily on these either way. So daily looks like it's been one of those that's been going up for a very long time. You can see the volume has been dropping for a very long time. So it's either getting prepared for a correction or a big move. So if it breaks this, you short it. If it breaks that, you do that. So you're not worried there. SC. Hawk, you're awesome. Appreciate it. Alright. So the screener is only step 1, by the way. You still got to do your homework on all these. When you go long, you can literally spend weeks. Like with leaps, it doesn't matter if you time it absolutely perfect. If you do your homework, you will make money. And so the important thing is to get that cog started, that wheel started. You put all the data into the wheel, and then you enter on the pullbacks. So you look at that nice pullback, you look at the pullback and bounce, and that's when you enter. So this is interesting. So it's been struggling to really break out of all-time highs. It does, obviously it just hit all-time highs here. EPSs have been increasing every quarter, which is nice. It's got a nice dividend. It's looks like a finance retail leasing company. Technicals are good. Balance sheet could be way better. That is a lot of debt. 46 billion. Do not like that one bit. Looks like it's gotten a little bit better recently. Price to earnings is screaming buy right now. Book value is screaming not buy. A lot of mixed signals on this. Not a perfect candidate. Keep it on the back burner. Chubb, I've been hearing things about Chubb for a while, actually. I mean, everyone likes the chubby, right? Alright, so earnings have been skyrocketing. Looks like profit margin has not been, though, so that's interesting. So assets to liabilities, fantastic. Operating is where they're making most of their money. Looks like they're reinvesting a lot as well. PE ratio is fantastic. Book to share value is really bad. It's interesting. I'm going to keep it on the list. I don't love it right now. It does actually look like it's at support. So if you were bullish on it, this could be the time to go in, though. So if it bounces here, you could see a nice bounce up to like 200, and his $40 bounce on a leap would easily double your money. So I think you set an alert on a breakout over 162 here, which would be resistance. So right here is your resistance. So if it breaks out over that, then you could see this go to 200, and that would be a very nice leap play. Alright, now this one just looking at the chart, I already love it. So if the data matches it, really excited to see where this goes. Everything I'm looking at right now is really exciting me. So revenue keeps getting better. Balance sheet fantastic. Book share value a little high. I'd like to see that literally in the like book share value. You want to see that single digits, absolutely, if possible. Doesn't mean it needs to be, but ideally, yes. PE ratio is a little high for me. It is actually below the SPY median, so let's get into it a little bit more. I don't have a quick and current ratio. It's a little sad. I would imagine they would. Free cash flow is good, 1.6 billion. It's financed by operating activities, so everything on this is good. I like this. This would be one that I would heavily consider, very heavily consider. So you got a double top cup and handle right here. You could literally see it. So you can see the cup there. You see the handle. I would only go in on the breakout here. Cup and handles are notorious for extending from the bottom of the cup to the neckline. So that would put our target at 146. So then we would just have to look at options and say we're almost absolutely certain when it breaks 129 that it's going to go to 146. It's almost a certainty. So when it does that, can we pick options that would have a good return on our investment? So I really like this one as a setup, and I want to put this on the short list. So I'm gonna put this on the green list right here. Actually, let's just make leaps. Let's go purple. So I'm gonna put that on the short list. All right, Old Republic International, insurance underwriting. Insurance has been very hot lately. Actually, I've noticed a lot of insurance tickers going really well. And the thing is because people aren't putting themselves as much risk, insurance has been very profitable lately, and it's still undervalued. And I think there's a lot of insurance tickers that could easily be highly investable right now. Yeah, we're gonna get into Barry next. So we got about 20-30 minutes left. About 30 minutes left on the live here that I feel comfortable with. Balance sheet. Let's go into this. Okay, so EPS has been improving. Good sign. Income statement. Very good sign. Let's go quarterly though. Annual's good too. I mean, quarterly improving. Balance sheet looks good. Book value not awful. Free cash flow good. Not great. Let's see here. EPS very good. I would like this on the short list. This would be a short list one too. Barry. Oh my god, I have heard so many things about this lately. We even set alert on it recently. I been hearing really good things about this, and I think this would be one that we could potentially play pretty easily. Appreciate all of you that are helping me out with the likes. I do this because I want to help you guys learn. The likes obviously help me grow my YouTube, but more important thing is hearing that story of someone saying, you know, I help them make money and pay off their student debt is a really powerful story for me. Really, really big motivator. So, I'm not loving their balance sheet, to be honest with you. It's a lot of debt. I usually like a 2-to-1 ratio. So I usually like 2 assets to 1 liability. When they're that close, all it takes is one event for them to be in big trouble. So cash flow's decent. Statistics, PE ratio is really good. If it wasn't for the balance sheet, I would be a really good bull on this. Income is increasing, so that's good. Income is increasing, and annually it's skyrocketing. So Yeah, I mean, if you look at it in 2017, it was at the exact same price it is right now, and their income is up 50%. So, for me, Barry is on the short list. Yes, we'll put Barry on the short list. Dropbox. All right, so Dropbox is I I think Dropbox is gonna go back to 46. I really do. In my opinion, I like Dropbox. I think the leaps are fairly cheap. I've been talking about it for a while. I know maybe I have this weird thing with it, maybe, but if they get bought out by a company, I highly think the price they'll get bought out with will be between 30 and 40 easily. I think they'll be bought out for around 20 billion, which will be about $50 a share. So let's look in the financials. Balance sheet. Gonna be a hard one with the liabilities, but that's why I think I think this is the year they saw. I've been hearing so much about it recently, in the last 3 months. I really think a Google or AWS or Cloudera. I could see Dropbox and Cloudera potentially partnering. I'm not quite sure on that one. That's just me in my head. There haven't been any rumors that would link that. You don't. Book per share value is absolutely there. So this is the first one we've seen with the book value being under 1, and typically under 1 is an extreme buy signal. Free cash flow is good from revenue too, so they've actually lost money from their financing activities. Statistics. The price to earnings ratio is not great. Let's just get that out there. Quick and current ratios are good, so their debt is coverable by their assets. Enterprise value 9 billion, 10 billion. That's just based on their share price. Price to book here. Income. Let's look at if they're increasing income. Their income is going up. Their debt to assets is going up, so I think that's probably due to, I think they had a recent acquisition, actually. I think that was what caused it. They did have a recent acquisition, if my mind is good. So I'd be interested in a Dropbox, and I would be interested in a leap on that. The green list, it's not accurate, so I would have to if you're talking the leap list, the purple list, yeah, I need to update the red and the green list, so don't worry about that. Alright, Regions Financial Corp, obviously a bank, 3% dividend yield, increasing revenue, increasing EPS, all good. Let's get into it. So quarterly revenue 1.4, 1.5, 1.6, 1.7, good. Balance sheet, yeah. Cash flow, eh. Free cash flow, very thumbs uppy. Price to earnings, very thumbs up. Current ratio, really bad. I do love the setup here with the all-time high breakout and retest. I would be interested in this as well. Yes, when we're done with the call, I will post the purple list in the announcements for everyone. Okay. So when we're done, we'll do the purple list in the announcements, and I'll probably add to it this week, but we'll definitely talk about that. So. I know a lot of people are positive on Workday. I see why. Revenue's been exploding. I just don't love that they don't make money right now. Bookshare's not bad. Cash flow's decent. They don't make money, so they don't have a PE ratio. I could see man, if they could just figure out a way to profitability, yeah, Workday would easily be a Workday could easily be a $500 stock. I really do think that. I'm gonna put that on the short list as well. Facebook I already know is on the short list, so I really think Facebook is going to 400 by next year. So what is a $400 call for 2023 costs? Hold on. Let me look this up right now. As long as Facebook doesn't, if Facebook gets out of the antitrust things, so January 20th, 400. Yeah, Bonk, we looked at it to begin the call. Really? It's still $2,000? Wow, that's expensive. Man, Facebook leaps are really expensive. I don't think we're going to be doing that on the short account, but I mean, it's going to go to 400, but you got to realize that Facebook isn't, as a company, it's not just Facebook. It's like everything else, Instagram, all their other stuff. So, okay, Quest Diagnostics. Let's look at this. Okay, so it's a $17 billion company. Health services, obviously. Yeah, I'm not saying Facebook won't pay. I'm just saying, like, I'm trying to figure stuff out for the small account right now. And, ooh, I really like what I'm seeing here. Everything I'm seeing here. Wow, what is going on? This looks amazing. Don't love that. I even like the chart. That one's good. I don't care about JPM. JPM run too hard. Logitech. I like Logitech's products. They've run really hard lately. I could get behind Logitech. Let me see. Let's go into it. Annually. 3, 2.7, 2.6, 2.1. Okay, it is increasing. That's good. We gotta get into the fundamentals though. PE ratio 15. Price to cash flow ratio. Usually like to see this lower, to be honest with you. In the singles. Quick ratio, current ratio, fantastic. Logitech, very good company. Price to book, single digits. I like that. Would love to see it under 4, but I'm not going to beat them up on it. EBITDA ratio, I'd love to see that 10 to 12, but they're close enough. Cash flow good. Balance sheet, fan-fucking-tastic. Yeah, I like Logitech. I could see this being a very good leap if it breaks. Blackstone. Let's get into Blackstone. I've been on Blackstone for years. I'm literally using all Corsair products right now, like my keyboard, my mouse, my even my mouse pad. I love Corsair. They do great stuff, by the way. All right. It's not on my if it's not on my list, we should look into it though. Revenue, nothing special in terms of growth. Balance sheet decent, book value good, cash flow it's okay. Nope, nope, nope. Even the chart says nope. Nutrient, chemicals, agricultural. Wow, revenue's been going awesome. Balance sheet, decent. Book value, not awful, or not great. Free cash flow, amazing, by the way. Enterprise value, very good. Current ratio and quick ratios, decent. Okay. PE ratio is high. Not stupid high, but PE ratios can be bullish. So quarterly we're at 54. I have futures going to 91, 92. I will have to look at it after we're done here. This is interesting. I'm gonna put it on the short list though. Not sure if it's got extreme upside, but everything I like about it is there. I'll put it on the orange list, almost ready list. Alright, Fidelity, another insurance, obviously. Do investing and insurance, so P ratio wise it's there. Book value it's there. I hate its balance sheet. I really do. Current ratio is okay. The reason you look at the balance sheets is because you're wondering if they're going to do a share offering, and share offerings always equal dilution. So dilutions always make it harder for it to grow faster because there's more shares available. So it's always something you got to look at. Put it on the short list though. HCI. This is one I've been talking about for a while. It's been going nuts. I mean, it was $57 recently. Volume's starting to curve back up. Wouldn't be opposed to an X leap, by the way. Alright. HCA Financial. Revenue has been pretty steady. A little bit better. These last 3 quarters have been increasing, so that's good. Debt to assets, terrible. Free cash flow. They have a lot of money in the bank, but it's okay. It's not like the perfect setup for me. Keep it on watch, but Ingersoll and Rand is one that I've been very interested in. We've talked about this a lot recently, so manufacturing industrial has been very hot lately. I've talked about it very much. Revenue's been skyrocketing. I mean, they doubled the revenue from last year. Ingersoll Rand is one to watch. So this is one that I am extremely bullish on. Really like Ingersoll Rand. They could have a little bit better enterprise and a little bit better book value, but everything else is there. Like, this thing could easily go to 100. Like, this could be ready to go. So if we go technical wise, if we consider this a cup and handle, that would put us at easily 63 by the end of the year. So I'm gonna put this on the short list. We'll figure out the other stuff after, but so Zion had a double top. It looks like another bank. I mean, if you could just go long in XLF, to be honest. No, I'm not even gonna touch this one. LKQ, a lot to get through here. That's it. Okay. Looks like they make aftermarket automotive parts. It's been very popular lately. Oh. Chemex retail trade. I don't like retail right now. Oil, gas, and pipelines. Yeah, I could see why. 7% dividend, great dividend stock. This could go back to 40. Leapwise, I don't know if it's there. We'll put it on the list though. Machinery. This looks like it wants to do a cup and handle right here. I think that's worthy of the purple list. FedEx is definitely worthy of the purple list. I already know that one. I don't know what 8 does. 8x8X package software. Don't look amazing. I think it's worth keeping on the orange list. UPS is definitely a purple list candidate. That is a power earnings gap. That is a peg gap formation. Revenue's been exploding. Balance sheet is awful. Everything's there except for the balance sheet, so keep it on the purple list though. A has been on my list for a while. Agilent Health has just been crazy. Orange list. So I'm going a little faster because I'm trying to get through all of them. Oh wow. Black and Decker. I didn't even realize I had charted this before. That's crazy. We could have played this from 168 to 200. Yeah, I think Black and Decker could continue to run. I already know I don't like that. Owen Corning. What is going on here? That is an interesting chart, I'll tell you that much. Hold on, let's look into this. That interests me. I already know that one interests me, so Lowe's. Where's Lowe's got on the list? God, I love Dell in the 40s, but it's a tough one right now. I love it. That's still fairly valued. All right, we'll give that a perp. Tractor Supply Company. Damn. Damn. Put that on the orange list. Yep. Short list. Whoa. That is a freaking chart. I don't have to look at anything else other than the chart to tell you that's on the short list. Target. Target, I actually want to go into the financials here. Alright, let's look and see if this is... I mean, Target's like Walmart for me. Both of them look interesting. I would put Target on the short list. My price target on Cloud Air is like 18. I'm just gonna go real fast off of technicals looking at charts. I already know a lot of these, by the way, so I wanted to cover a few things, but I don't have a ton of time left, so. Jesus. That thing is going fucking nuts. Alright. Okay. All right. Let's do futures, and then let's go. We're gonna end the night on Cloudera. So I think everyone is like, Cloudera, what? Let's do quick futures, quick Bitcoin update. This is daily, obviously, so go 15 minutes. I think futures will retest the 393 to 391 area. I think the most logical is right there. I think futures are going to bleed all night, so we'll see. Alright, let's go Bitcoin USD. Bitcoin looks like it is just doing a normal correction, so you got A, B, C. And so it's either going to make a D and an E and come back down to 50, or it's going to hold this and break out. So if it breaks 54.6, then I will sell. And if it holds, then I will not. Alright, Cloudera. Desert tortoise. So there is actually, you bring up a very good point. There is many times that buying shares is more profitable than buying leaps. What you need to look at is expected growth of the stock. So you need to do calculations. Will the dividend plus share growth outweigh the growth of the leap call that you play? But you also have to keep in mind that when you buy that leap, you're also planning on selling weekly premiums to gain stuff. So basically the premiums you're getting on selling against that leap in a diagonal spread strategy will be basically your dividend on your leap. So there's a lot of math that goes into it, and so you just have to figure that math out. And I'm not going to get into the super details of it, but that's just the basic run through of it. So why I like Cloudera. So Cloudera has been a very undervalued stock. It's been very popular recently, and it went through a very strong correction. And so basically Cloudera IPO'd at 17, ran all the way up to 23, and has been a dog, literally a dog, for 3 years. Till recently, this last year. So basically, the beginning of the year, Cloudera was like the hot stock to buy in as the next like cloud-based industry. And then it had some disappointing earnings, and the earnings were good. What was the problem is their guidance was bad. So I'm thinking that they're trying to do, the under promise over deliver approach, which is my favorite approach. And so they under promised on their guidance, but I think they're gonna surprise in June. And so I'm prepared to hold this literally all year. And we have this nice gap here. We bought the $10 leap for about $370, 360. So literally, if this gets to 1450 and this fills, all it has to do is fill this gap, maybe form a right shoulder, and we're up 30%. So long-term holdings, I'm not worried. So Cloudera, let's get in the financials on this, because I think that's important on long-term. So quarterly. Enterprise value, good. Price to book value, very good. Cash flow, decent. Balance sheet, very good. Revenue increasing, very good. Annually increasing. It's been going up almost 50% a year. Like, they are doing fantastic. And so I really think they're only a $3.5 billion market cap. 3.5. They make about close to $1 billion a year, so I think they could buy you about triple what they're worth. I really think their upside is that $30 to $40 range. I don't think it'll happen this year, but I do think it's a very strong possibility we retest highs of that 19 to 23 area. So at 19 to 23, we're looking at 3 to 4 times our money in the same year, which is very, very high upside. So the upside is very there. The low side, like literally the worst case scenario, is we probably break even on this. Like, it's at the perfect price point to go long on. It really is. So I would love if they would turn their EPS positive, because that would help with my just my thought process of companies should make money. But what is with you and Zuo? Like, why? Alright, we'll do Zuo, and then this is the last one for the night. That looks terrible. Alright, balance sheet. It's okay. Book value, good. Statistics. Doesn't make money. Their current and quick ratio is good. No, I'll do Zuo, it's fine. Price cash flow, awful. Balance sheet, cash flow. They don't have a lot of money left. 7 million is not a lot. So this is a very small company, apparently. Honestly, it's not that bad. I'm gonna be. I mean, they don't make money, but they're increasing revenue. They're increasing everything. It could be attractive. I mean, it got a lot of hype right away. You know, it's a small company, 1.7 billion. You know, they do package software. I'm gonna say it's okay. I'm not gonna beat you up on it. I think it's okay. I am worried technically about a potential Head and Shoulders here. So I'm wondering if it basically makes a Head and Shoulders into Resistance here. So basically, you know, you're looking at a Head and Shoulders. I'm wondering if it goes like this. And so this could be a good opportunity if it breaks down to about 12 and a half. That'd be a very strong entry point in my opinion. And I think that would be a very low risk, high reward as well. So I'd have to look into it a little bit more, but I don't think it's awful, to be honest with you. I think it's one that was worth pointing out. And looks like Tatum Tots put you in timeout, but I do think you're okay on this one. Vuzi, I have heard there's been so much controversy on this in terms of what it's worth and fair value. Not necessarily on the company itself, but just a lot of volatility, obviously. Balance sheet, good. Cash flow, awful. They're gonna do a share offering soon. Yeah, Vuzi's gonna raise money. I'm pretty sure if they didn't do a share offering on Friday with everyone else, they'll do one next week or two. They did do an offering last week. That makes 100%. Like I said, like they looked like they needed to do one, so that makes a lot of sense. And so, I mean, honestly, not my perfect lovable thing to get into. I like the industry they're in. I like what they're doing. I just think I would like them a lot more at $9 to $10 than 22, if that makes sense. I just don't like them at what they're priced at right now. I think they're overpriced right now. So it's hard invest for me. Myth, you can just message me at. We're friends. Got questions? Just message me. Thank you guys and gals very much. I'm gonna get off now. Hope this helped you a little bit learn about looking into what to look for. You know, we talked the scanner in the first half, and we used the scanner list, and we went through the fundamentals to reinforce them. I gave you everything there, so we went through the entire list. I downloaded the purple list of the stocks that I thought were decent to good, and hopefully it helps. There's a lot of other stocks out there. This was just based on the stocks. Chris, so one of the other founders, Thomas, is super into Slug. He actually owns Slug. I don't know much about it. I just know it's a esports gaming franchise, so I've heard good things. Things look good on it. If I be honest with you, it's basically a penny stock in terms of how big it is. Everything about it looks awful financially. Bookshare and all that looks good, but like their finances look terrible. So they're probably going to do a share offering soon if they haven't done one soon. but I would expect one within a month or two, and I think this will go back to $4 to $5. So, sorry. Yeah, I'll probably be live tomorrow. I'd like to do some live trading tomorrow. I won't be live this Friday because the stock markets aren't open. But I'd like to be live Thursday. I think Thursday will be fun. So I won't be live in the morning, most likely. I have to do a few errands, but I'm hoping maybe by like lunchtime for the second half of the day. And then I'll be available most of this week. So. No, it's not possible to scan. Like, you can't scan whether they're going to come out with a possible offering. Well, actually, maybe? If an offering is likely? Kevin, you gave me actually, as I was processing it in my head, Kevin, you gave me a great idea. I might be able to do that, actually. I might be able to make a scanner to tell you if a stock is likely to make an offering. I'm gonna write that. Hold on, let me write that down. I actually really like that idea. Let me put that in my idea room. I think I could do that. Yeah, you just look at the fundamentals, free cash flow, debt to earnings. Like you could easily do that. I think you could easily do that. So, alright, thank you all. I'm gonna get off. If you'd like, I might play a few games after this. If you're in the Discord and want to hit me up, we can chill and talk individually. So hopefully you all have a great night.